Hello, Phil Plourd here, president of Everag Insights. Please be sure to read the disclaimer at the end of this video. Okay, we're back to talk about Phil Plourd's Monday Morning Demand Notes. That's right, every Monday we offer data, analysis, news, tidbits about the macroeconomic and consumer trends we think matter for the markets that we cover. This week, we're looking at consumer credit. Federal Reserve just published November numbers, and it continues to show a bit of a slowing in revolving credit outstanding. That's mostly credit cards. If you look at the 4 months between August and November, outstanding balance is up $1.4 billion. That's way lower than what we saw in the prior 4 month period, which was $17.6 billion. Now, revolving credit balances are still up 4% year over year. Delinquencies are rising. We see this as a headwind and an ongoing problem, even though maybe the pace is slowing down. And this week, we look at another area of consumer spending, kind of quasi credit arena, which is buy now, pay later programs, BNPL. Best I can tell, about $120 billion of transaction volume under BNPL in 2024. That was up pretty decently from 2023. If you look at the just completed holiday period, Adobe Analytics said $18.2 billion of spending on BNPL, about a 7.6% share of overall transaction volume for the holidays. These programs are gaining in popularity. And if you look at the data, about 27% of BNPL users are buying groceries with these services. That's up from 19% in 2023. That's more than a quarter on BNPL. It just speaks to the fragility of the consumer, especially in the middle and lower income categories. We kind of are maxing out our credit. We're relying on BNPL just to keep up with inflation. The consumer environment is still delicate. Maybe not a disaster, maybe not going to fall off the cliff anytime soon, but still very, very fragile. And that's what we're talking about this week in Phil Plourd's Monday Morning Demand Notes.